Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick, Hyde, Taylor Riggs, counting you down to that closing bell, here to help take us beyond the bell. Carol Massar, Stenovec, bringing together our Bloomberg Radio, television, and YouTube audiences worldwide to parse the crucial moments of the day. And Carol, I was just telling Caroline and Taylor about the fact that you go back to that record high that we hit back on July 12th. We had that 3% drawdown. We've almost erased all of those losses here over the last couple of sessions.
Yeah, we just continue to grind higher despite concerns about the virus, despite concerns about economic growth peaking. Got to say, watching this market trade, those big tech names, and we're going to get a big one after the close, Intel, they continue to really provide some support, Tim, for the market.
Yeah, I mean, it's interesting because a lot of the day it really seemed like there was a real lack of direction until this afternoon when we started to see stocks move higher in the S&P 500, taking a leg up later in the day. Interestingly enough, to that point of big tech actually outperforming, we are seeing now the majority of stocks in the S&P 500 are actually lower, despite the fact that it's up 0.2%.
Yeah, it's cautious trading, lack of breadth, and also lack of volume. I'm looking at volumes down 16%, particularly on the NASDAQ, which is your outperformer when it actually comes to percentage change, Taylor.
And the NASDAQ 100, of course, as we know, trying to hang on to those record highs, despite what we're seeing is an equal weight index, as Romaine talks about the lack of breadth and broadness of this rally. We're bringing it back. I think there are some interesting comments, though, from Patrick Palfrey saying in the short term he is looking for higher yields in that reflation trade. But 5 years out, it's still going to be all about big tech.
And look, we've talked about this before. When you have Microsoft and Apple and Amazon, Facebook all in the green, you don't need broad participation, at least to get to the levels that we're getting at today. Obviously, this isn't a strong rally, only up about 0.2% right now on the S&P 500 as we get the closing bell here. That's up about 9 points. It'll take a few minutes for these numbers to settle out, but you pretty much get the picture here. The NASDAQ composite up about 0.4% or 52 points. And the Dow Jones Industrial Average trying to participate in this right now, it's only up about 25 points. We'll see whether it can straddle that line right now between gains and losses. We didn't really mention it, though. The Russell 2000 not having a great day at all. A lot of that because of some of the weakness we saw in financials and in energy. Carol, the Russell 2000 looks like it's going to close the day down 1.6%.
All right, and let's get right to Intel because it is crossing the Bloomberg terminal, and we see the stock already up about 2.8% here, raising its 2021 annual guidance. So raising its guidance for the year, talking about the third quarter adjusted revenue of $18.2 billion. The street's looking for about $8.27 billion, so maybe a hair light there. Sees third quarter revenue of $19.1 billion, third quarter adjusted EPS of $1.10. Romaine, that's 2 cents better than what the street was forecasting. This is a big deal. We want to see what the company has to say about the outlook, especially when we heard from other chip companies talking about could we be seeing peak demand here. The stock is up 3.7%.
Yeah, and that data center growth in the quarter, that's a pretty big deal. It's $6.46 billion. Now, that's a decline of 9.1% year over year, but it's above what the street was looking for. The street was looking for about $5.94 billion. And remember, this has been the real weak spot for Intel here. This is where AMD has really been eating its lunch, and a lot of investors really wanted to see a little bit more strength there. I guess you can call it strength. Again, down 9.1%, but higher, Tim, than what the street was looking for.
Yeah, Intel had been expecting earnings around $17.8 billion. So this one, a nice little beat here. Shares higher now by 2.5%. This is a turnaround story. What's the update on the turnaround here? The company's spending so much money, especially here in the United States. How is that going to affect margins? How is that going to affect growth?
And profitability, and the numbers coming out for their full year adjusted earnings per share will be about $4.80, so says Intel. They had previously seen $4.60. The estimate was for in line with that, so they're managing to upgrade not only their revenue guidance, but their overall bottom line guidance as well. This is a turnaround in the server chip unit, what investors wanted to see. But also remember, Intel, the PC market is still the biggest provider of sales, Romaine.
Yeah, absolutely. I mean, of course, a lot of investors last quarter, remember, we were sitting in the same seat, and they actually sort of poo-pooed that because they were like, well, it's still PCs, right? Eventually, that's going to run out. But you talk about the turnaround, guys. I mean, we should point out, Pat Gelsinger has been there for, 5 months. He took over in February. You got to give the guy a little bit of time here. So it'll be interesting to see what he says on the call about his strategy for that turnaround, Taylor.
At least within the press release, saying it's all about innovation and digitization and improvements in efficiency. We joke about the PC business, but the press release saying PC Mobileye businesses achieving record second quarter revenue. in the second quarter. Their PC platform volumes were up 33% year over year, and Mobileye closed 10 additional design wins. So really highlighting, of course, that big business for them.
Is this all like Minecraft? 'Cause I feel like that's all it is. I'm like, my son wants he needs a new computer for everything. I don't get it. Like, I thought a computer was like an all-in-one thing, but apparently you need one for Minecraft, one for this.
Hey, let's go, though. Let's look at Intel shares again, though, because they're now up about 1.3%. So we're seeing some of the trade in the after hours, some of the enthusiasm, the initial enthusiasm being kind of tempered back. Remember, this is a company that, as Tim mentioned, it is definitely going through kind of a resurgence, redefining the business, looking to develop their own chips, but also be able to be a contract manufacturer for other companies. And in order to do that, they've got to spend a lot of money. And that's maybe what can also make investors a little bit nervous going forward.
Yeah, I should mention, Carol, that we are awaiting Twitter. We're awaiting Snap. We'll bring those numbers to you as soon as we get them. One point that Ian King made on our air just a little bit earlier today is that the idea of the PC market dominating and being, the most important business for the company, there is increasingly diversity when it comes to what uses chips, right? We talk a lot about cars using chips, but it's pretty much easier, as Ian King said, to say what doesn't use chips rather than what does use chips, because so much of what we interact with and use each and every day actually has chips in it.
Talking about their scale and renewed focus, Pat Gelsinger talking in the press release on both innovation and execution. I want to know, I'm sure plenty of people asking about their acquisition focus as well, because I was speaking to Global Foundry CEO a little bit earlier in the week. And remember, there was a big report that Intel was eyeing up that particular asset, willing to spend up to $30 billion on it. That CEO, Global Foundries, pushed back, said, no, we know nothing of this at the moment. There's nothing in it. But the question is whether Pat Gelsinger is also going to be looking at acquisitions in some way to be beefing up their focus and indeed chip manufacturing.
Dare I say it, I am poo-pooed again by the lack of, commentary that we were looking in a 2-page press release instead of a 40-page slide presentation that sometimes we get from the other companies. Really, again, just sort of highlighting, Carol, sort of the basics of the business, and then, of course, saying tune in to the earnings call.
Yeah, absolutely. And there are going to be a lot of questions for him about the spending and going forward. And everybody wants to know, where are we? These are, the semiconductor industry, you do see the booms and busts, right? There's a big lead time. And so you've got to make investments in terms of in factories. These are not things that you turn around very, very quickly, Tim. And so this is where things can start to get a little crazy. Twitter coming out, Romaine.
Yeah, Twitter crossing the wire right now here. The numbers look pretty good. Actually, having a little trouble pulling them up here.
Daily active users 206, just slightly ahead of estimates of 205.9 million. Third quarter revenue 1.22 to 1.3 billion. Also remain ahead of some of the expectations that we were getting. Yeah, and I mean, this actually is pretty good. I mean, the street was looking for about 50% growth here on that revenue number, 1.22 billion, roughly here. 1.2 billion on 2Q revenue. We should point out the 3Q numbers. This is their forecast for revenue going forward here. They're given a range of 1.22 to 1.3 billion. That's slightly higher than what the street was looking for here. It'll be interesting to see how some of the data licensing businesses went, as well as some of the monetization efforts here, because that's always been the knock on Twitter, that you did have some decent revenue growth, you did have EPS, but you really didn't see the type of monetization that you were getting out of Facebook, out of Snap to a certain extent, and even Pinterest, guys. Yeah, shares of Twitter popping in after hours, trading higher by just about 6%. Jack Dorsey saying, quote, as we enter the second half of 2021, we are shipping more, learning faster, and hiring remarkable talent. For example, our increased shipping cadence contributed to reaching 206 million average monetizable DAUs in Q2. That's up 11% year over year and 3% quarter over quarter. There's a tremendous opportunity, Caroline, to get the whole world to use Twitter. I want to hear more about product innovation. Yeah, well, look, they've been trying for years to get the whole world to use Twitter. And that's been one of the challenges with Twitter, right? The problem. Yeah, 200 million daily active users is nowhere near the 3 billion that Facebook has, and nowhere near the 8 billion people that live in the world. But I'm looking at advertising revenue. Up 87% year on year. So they are luring in the advertisers, it would seem, overall, Romaine. Yeah, I mean, anyone who's been on Twitter lately knows that the advertisements have gotten out of hand. I do want to point out here, you're looking at the shares right now at $75 here. They did get up to $76.70. We should point out that record high is at $77.66. And remember, they've had trouble getting back there. I think they set that back in early March. So there's been some concern about Twitter not really being able to claim that record high. Obviously, it's not clear if these gains are going to hold into tomorrow. But if they do, they actually have a
shot here getting back to that record high, guys.
Well, and you also want to hear about, its other platforms. It's paid content subscription platform called Super Follows. We want to know about what they're doing there. Also, it's Twitter Blue service and its email newsletter review. I mean, this is a company that's been expanding and looking for new revenue lines. So we want to know what else that they're doing, Caroline.
But Fleets didn't work, right?
Yes.
I was only just getting into Fleets. I started to put up my videos on there, and then they told me literally that day that they were going to be scrapping it. So, I mean, that was clearly an area that they weren't loving quite so much.
That was the problem, Caroline. You weren't fleeting enough.
They just needed to wait for me, right?
Yeah, Fleets are still available, so you can still do it for a little bit more. But the thing about Twitter is that the core product, unlike Facebook and Instagram, if you think about the way that those products have evolved and changed, Twitter's core product, it really hasn't evolved and changed. And we think about what Twitter's trying to do with Twitter Spaces. It's this Clubhouse-like competitor, right? When was the last time any of you were thinking about Clubhouse or getting in a Clubhouse? So it does seem.
Those.
Sorry?
Have you been doing any of the Spaces? Because they're kind of fun to do.
They're really fun, but it doesn't seem so sticky. It doesn't, when it first launched, it was like this thing that everybody was doing, and same with Clubhouse. And it just seems like that energy has gone away a little bit. And I wonder about Twitter's core product. They had that big meeting earlier this year that talked about the way they were going to evolve the product to cause the company's stock to go higher. When are we going to see that if Fleets didn't work out, for example?
Taylor, I'm actually kind of disappointed that Tim didn't do a Spaces.
Spaces. Well done, Romaine. Look at that alliteration.
There's still time.
It's not too late. It's not too late.
Spaces. I just give you further comments, of course, on the outlook, talking about, again, thinking that expenses are going to grow, but still hoping that revenue grows faster than expenses as we think about full year 2021, and just hinting that they are still continuing to see modest impact from the rollout of the changes with the iOS 14.5, but again, hoping to get through those with the pandemic. Carol.
Well, guys, the tale of two tech companies, because Twitter's up more than 6% in the after hours on that third quarter revenue forecast. Intel, though, now just up about 0.9%. So a very different story.
Keep an eye on Snap. We'll see how that compares.
It's already rising after hours.
There you go. All right. That's going to do it for our cross-platform coverage here on Bloomberg Radio, Bloomberg TV, and YouTube. We'll see you again, same time, same place tomorrow.